Honasa, that's the stock lower by 5% after nearly 11% equity worth about 1750 crores changes hands at an average price of 500 rupees per share. Sources tell CNBC TV18 that Peak 15 and Sequoia are among the key sellers.
Tata Steel is higher in trade after the company signs a $500 million grant funding agreement with the UK government for green steel.
Varun Beverages rallies more than 4% after shares split in a 5:2 ratio.
Kalyan Jewellers shines in trade after HSBC issues a bullish note on the stock, raising its target price to 810 rupees from around 600 rupees earlier.
And the new kid on the block, Sri Tirupati Balaji Agro, lists on the exchange with a premium of about 8% to its issue price of 83, currently sitting with a gain of 14%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. And as we speak, the markets are holding well in the green. We're holding at around 25,000. We're not able to build onto those gains, but par for the course. A bit of a bounce back is what we're seeing on the Nifty Bank. That 51,400 mark has remained elusive. So that's the mark you want to watch on the upside. But the good news, Mangalam, is portfolios are feeling good because all those indices on the top of the screen are a shade of green.
Absolutely, and the one on top of my head, that's the mid-cap index, which is doing a lot better. Nearly 1,400 stocks advancing for 950 stocks, which are declining. Well, it'll be interesting to see how the day ends for the market, but I know how the day will end for you, Nigel. Wish you a very, very happy birthday here on Chartbusters. We've, had a lot of great moments here. So just take the time out to wish you and, wish you the best for the next many years out here, and may our partnership continue.
Thanks a lot, Mangalam. We've done some of the most cracking interviews, I would say, are well appreciated, and it's been great, having you as a friend, as a colleague, and a co-anchor as well. So let's build on to that.
Let's build on to that, and let's see whether the market builds on to those gains or not as well. We have our friend Sachidanand Uttekar joining in for a quick technical check on the market. Sachi, your thoughts on the way, the market pans out. Okay, what we'll try to do is that getting you a few ideas for profit coming from our colleagues at Money Control Pro, and then get in Sachidanand thereafter. All right. Do we have Sachidanand with us?
I think let's do, Mangalam, what you were talking about. I'll tell you what, we'll get you a few ideas for profit from Money Control Pro. Nitin Sharma, moneycontrol.com, joins us to talk about a stock that he's tracking closely. Nitin, take it away.
Today's idea for profit is eMudhra. eMudhra has been following expansion strategy in the overseas market through the organic and inorganic means. In the Q1 FY25, company reported a YOY revenue growth of 15.9%, but a contraction of 7.3% Q-on-Q due to the regulatory change in the digital trust services business. Slower revenue growth led to an EBITDA margin slippage by 180 basis points Q-on-Q. Company has been pursuing an aggressive acquisition strategy and acquired 3 companies in US in the last 1.5 years. Acquired businesses are utilized for cross-selling to the clients and leveraging their tech capabilities to bridge gaps in the existing product and services for the developed markets. In the Middle East and Africa region, eMudhra has been seeing good traction for its services and at the same time expanding its footprint to the Asian markets including Philippines and Malaysia. Cybersecurity, digital identity and paperless transformation have a large under-penetrated addressable market that offers a long growth runway for eMudhra to its well-accepted product suite and execution track record. Management guidance of 25 to 30% YOY revenue growth in FY25 has been unchanged and includes the impact of the acquisition made this year. eMudhra trades an FY26 PE of 43 times, and which doesn't reflect the potential synergy from the acquisitions. We continue to see a buying opportunity in stocks at the current level.
All right, we'll get you some more stock ideas later. But for now, a bunch of stocks are buzzing around. Just keep an eye out on Zomato. That stock surged to the high point of trade. It's up around 4% today. It's up 10% this week itself. It's been a big mover, more than doubled this year as well. The street likes the prospects for Blinkit going forward, maybe some value unlocking coming by in their going out business as well, especially after the acquisition of Paytm's, live entertainment business. And then, of course, the operational improvement that continues in their food delivery business as well. We'll keep an eye out on Zomato. Apart from that, Latravenues Tech, which is ixigo, yesterday made an announcement of a tie-up with Plixbus. So that is up another 4% in today's trading session. And then you have Bectors as well, doing extremely well with a gain of 8%. So the broader market's actually doing a lot better than the frontline end of things, which ain't particularly bad, with a gain of 100 points on the Nifty. Take a short break. On the other side, we have Rajiv Kaul, who's the Executive Vice Chair and Whole-Time Director, as well as CEO at CMS Infosystems, to discuss the company's business outlook at large. Stay tuned.
Welcome back. Well, let's get a quick check on the markets. We have Sachidanand Udhekar who joins us. Hi, Sachi. It's been a good start. The bulls will want, the Nifty to build on from here, but we're facing resistance at higher levels. I think 21,150 is the crucial resistance mark. How are you reading trade, and what would your trade be as of now?
Good morning, Nigel, and wish you many, many happy returns of the day. I think the markets are consolidating well. In fact, the 20-day exponential moving average support, which is placed at around 24,930, and the resistance, which is placed somewhere close to around 25,080 kind of a zone. I think this particular consolidation band is very healthy. The weakness for the market will only persist in case if we see the Nifty, slipping below that 24,860 mark, which is its 5-week exponential moving average support. So far, I think the supports are held on well. The consolidation has been very, good. But overall, I think we need a confident breakout above that 25,080 mark. The moment we see that, we may see the Nifty, rising towards 25,300 kind of a zone in quick sessions. But as of now, I think it's a day of consolidation again. When it also comes to Nifty Bank, the support at around 51,000 is very important. Its 50-day exponential moving average support is placed somewhere close to around 50,960. So until unless these supports are held on, the probability of a breakout on the higher side in the coming days looks brighter. So we are optimistic on the market. We are also expecting that the Nifty Bank may eventually scale towards 51,800 within a week or so. So we are advising buying in this particular consolidation when it comes to Nifty and Nifty Bank as well.
All right, take that point. And individual stocks, what are you bullish on?
Kotak Mahindra Bank is one particular counter which we have recommended to our clients, and the way its weekly charts are shaping up, we have a bullish flag formation. Today we have seen a good, strong short covering move which is unfolding well. If you look at its monthly scale, we have a positive crossover on its 5 and 20 exponential moving averages, with the RSI now trending above 51. So it's a good sign that the 6 weeks of consolidation is mature, and we may see a good strong rally in this particular counter. Eventually, we see this stock rising towards 1885 kind of a zone, and that's why we are still recommending building long positions here, keeping a stop loss somewhere close to around 1810 on the lower side. The other stock on our radar has been Can Fin Homes. Yesterday, again, we saw a very strong comeback or a pullback rally after placing a double bottom formation at around 840 kind of a zone, where its 50-day exponential moving average is also placed. There are good signs of short covering even in this particular counter, and the way the data is shaping up, we are anticipating that this particular momentum may extend towards 930 during this particular series itself, and that's why we are recommending building long positions here. Momentum longs can be chased with a stop loss at around 876 on the lower side, and a positional target of around 930 is intact.
All right, take that point, Sachi. Thank you so much for joining in. Meanwhile, just keep an eye out on Kalyan Jewellers. That stock's doing well in today's trading session. In fact, over the last couple of years, it has rallied fairly hardly. In the last 2 years, the stock has grown about 8 times in its value, and HSBC still sees further value out here because they believe that it's still midway in its value creation journey. Where do they see this coming from? They've seen Titan's journey as a useful guide to track the long-term growth catalysts for the jewelry sector on the whole. They see clear potential to quadruple their store count from close to around 217 to about 800 at the end of this decade itself. And they say that for all of this, Kalyan trades at an FY26 price to earnings of 56 times after an 8 times move in the last 2 years, which is a 10% discount to Titan. They believe that, while the discount to Titan has narrowed, the valuation is appealing if pitted against all the other consumer opportunities and looked at the growth prospects that Kalyan Jewellers offers. So after having upped their store guidance and also, some long-term margin triggers, they believe that the target price for the fair value should be close to 810 rupees versus 600 rupees. So that's about HSBC's view on Kalyan. Two things I'll be watching out for. One, the 15 days ago, there was a large trade where promoters bought 2.36% stake from Warburg Pincus. And secondly, with the valuation gap narrowing between Titan and the others, will Street start looking at the leader, or will they still back the followers like Kalyan and all of them, is something we'll most definitely keep an eye out on. As you can see, the last 12 months, stock up around 175%. Titan has been an underperformer. The valuation gap has narrowed. Let's see whether the Street bets on Kalyan, Senco and the others, or they take a look at Titan itself.
Okay, all right. Well, let's shift focus then to specialty chemicals. The sector has seen exports weaken in August on the back of various headwinds. Sonal joins us to fill us in with more details. Sonal, take it away.
Thank you so much for that. Well, yes, the specialty chemical segment this time around in the month of August did see some impact on exports. Remember, it has come in after a month of good export number that the industry saw. And this turned weak and there was a decline of single digit on a quarter-on-quarter basis for the entire industry. Number of reasons for that. One is the Chinese aggression continued, the container issues continued, which led to higher freight costs. And third is the geopolitical tensions as well. So those are some of the reasons why the industry was impacted this time around. If we talk about stock-specific data, let's start with Aarti Industries. And this one saw a decline this time. On month-on-month basis, exports were they declined 44%. And if we talk about the numbers in Q2 so far, it was down 28% sequentially and 11% on a YOY basis. There was a sudden weakness in exports, and it was triggered by the decline that they saw in one of their major product, which is MMA or monomethyl aniline, which is an export product, and that is where it declined 38% on a sequential basis. Phillip Capital has gone ahead and cut their EBITDA estimates on Aarti Industries by 16% and 9% for the next 2 financial years. For Atul Limited, exports came in at 175 crore rupees, but quarter to date, the exports have been good. 5% in growth sequentially and 40% on a YOY basis. And Phillip Capital has gone ahead and increased the target price to 8,500 rupees per share versus 8,000 rupees per share earlier. If we talk about Vinati Organics, good numbers again, exports at 121 crore rupees. It's up 38% on a YOY basis. However, it's flat on a sequential basis. But their major product, ATBS, did really well. That is where there was a 43% YOY growth. Antioxidants saw growth, and so did butyl phenol. These are comparatively newer products for the company. For SRF, exports at 340 crore rupees, it was a decline, 2% sequentially, 10% on a YOY basis. While the specialty chemicals, which had been reeling under pressure, did see some improvement, the other segments did not. And that's the reason we saw this decline this time around. So looks like overall it was not very impressive in terms of data. And the industry has been looking at recovery in the second half of FY25. We'll have to watch out for that one.
All right, we take that point. Thank you, Sonal, for putting the spotlight in the specialty chemicals segment. Take a short break, and as promised, we'll get the management of CMS Info on the other side. Welcome back. You're watching us here on Chartbusters. As promised, let's get you the management of CMS Info System. The stock has rallied over 40% this year. DAM Capital recently also wrote a bullish note on the stock with a target price of 650. Let's tell you, what the plan of the business is going ahead. And the best person for doing that is Rajiv Kaul, the Executive Vice Chair, Whole-Time Director and CEO of the company, joining in. Rajiv, always a pleasure speaking with you. The last time we spoke, you said that it was a T20 innings. Let's talk about T20 and for the long-haul test as well. For this year itself, you had said that, the target of 2,700 crores on the top line, you're looking at reaching the upper end. We're in the middle of this year so far. Do you think there is a chance that you surpass that upper end as well? If yes, then by how much? If not, then, is the upper end intact? That's point number one. And on the second point itself, for both your verticals, which is managed services and cash logistics, if you could give us a sense of the growth path ahead.
Mangalam, good morning. I was wondering which game you're going to play today. Is it going to be tennis or pickleball? But let me stick to the baseline right now. I don't want to come to the net so quickly in the year. we've had a very robust last year. As I told you, we had 1,900 crores of order wins, which was 2x the wins we had in the prior year in our managed service and technology business. We have given a guidance of doubling our revenue for this year on a base of FY21. And as of now, we are, as the team, totally focused on achieving that guidance to make sure that we can be in the 2,600 crores out of revenue range, 2,700. Very early to talk about can we surpass that. Your Q1 has been a little bit slower seasonally as an industry for everyone because of the elongated election cycle. Let's see how H2 works out. But we are reasonably confident of hitting our 2x growth from FY21 to 25. So I think that's the only guidance we'd like to stick to right now and hope we can deliver that.
Okay, 26 to 2,700 crores. Hi, Rajiv. Good morning and thanks a lot for joining in on the show. I wanted to understand this first of its kind deal win for y'all. You know, the AIoT remote monitoring solution. Yeah, that's the first of its kind. And AIoT is something that y'all have been looking at as well. Tell us more about this. Is there more order wins in the pipeline? What's the current order book at? As you said, last year was great. This year, how are things shaping up?
Well, happy birthday, Nigel. Hope you're having
Thanks
a lovely birthday. Our AIoT business, is our newest and youngest business. We incubated this in FY21. We have already hit an annual revenue run rate of 100 crores. And from an outlook perspective, we have seemed fairly confident that we can double this business in the coming 3 years. So we feel in addition to our retail cash logistics business, our AIoT business should lead our growth in the coming years. The new order win, which we had in Q1 of this year, is one of its kind because we are a sort of a newer entrant. We have come with a very different machine learning AI stack to help banks upgrade their remote monitoring and their branch and ATM surveillance systems. This one is unique in the fact that a bank has entrusted us to build and operate an entire end-to-end platform, which will encompass the command center on-prem to the branches and even the ATMs. So it's sort of an interesting use case. We think this would become a significant platform to build for us, where we're investing money in building this technology, and could become a reference case for other banks to emulate over the coming years.
So if you could give us a sense of the TAM that you are, looking at out here, because it is a one-of-its-kind product, end-to-end solutions, etc. What are the typical realizations on a business like this? What does it open up for in terms of cross-selling and upselling opportunities?
So, Banglam, you always go deep into in a quick interview, but let me try and answer this in a manner which we can disclose things at the same time, don't share too much comparatively. From our perspective, there are 250,000 ATMs in the country. There are 120,000 branches, and I'm only talking still BFSI sector. I'm not talking about the sectors like retail where we are focused on. We feel almost 25 to 30% of this base has been covered with new technology upgrades from a surveillance system perspective. The remaining 70% is still not covered. Those contracts and deployments should happen in the coming 3 to 4 years, in which we hope to maintain our lead. We are currently the number one player in BFSI for this segment, and we want to make sure we remain and retain our leadership position there. From a cross-sell perspective, I think, first of all, we entered the segment focusing primarily on the ATM segment. From there, we are able to build a stack to cover bank branches. And then from there to go on, the command centers of the banks on the on-prem itself, we are able to cover that. As you penetrate these sectors, you're able to develop different use cases each bank may need from a software perspective, which is sort of a one-time investment. And then you can sort of take that investment and deploy the product, the software product, for other banks who may feel a need to deploy that. From a broader perspective, there is an opportunity. Again, I think this is in the midterm, not short term, for us to be able to take this learning and apply to the broader retail sector. Now, retail could be, I was listening to your interviews earlier, jewelry stores, right? Again, the sort of technology being deployed there is, let's assume, X. I think there's an opportunity to make it really significantly upgrade the technology out there from both a surveillance, monitoring, and analytics perspective. So these are sectors we will focus on and keep building out over the coming 4 to 5 years. And that's where, our confidence in terms of saying that we think we can double this business in the next 3 years, make this contribute 8 to 10% of our overall revenue comes from.
Okay, all right. Rajiv, you've given us a top line number, 26 to around 2,700 crores. What about margin outlook? Should it be in the mid-20s? And also the ROC, typically, I think you've done mid-20s odd. So give us a guideline on both those two.
No, I think as a service and solutions firm, I do think it's important for investors to keep thinking ROCs. Our margins are world class. We're at the 27, 28 sort of percent EBITDA margins. We don't give margin guidance, as you know, Nigel. But from our, if I can only talk historically, over the last 15 years of creating this company till now, our revenue has grown at a CAGR of 17%. Our EBITDA margins and PAT has grown at a CAGR of 20% plus. However, ROC is, I think, the right metric. Our ROC last year was 27% plus. But if you think of it from the last 3-4 year average, we've been 25% plus. For us as a team, where we stand today, driving revenue growth and market share wins is very critical while we maintain a good margin profile. And therefore, achieving and maintaining a 25% plus ROC is very important to us.
Got it. What about inorganic growth? You're focusing on organic, it seems, as of now, but there are plenty of opportunities out there. Is there something in the anvil?
Well, when you think of these bullish stock markets, M&A takes a back seat. It's not easy to do M&A when everybody is going and listing the company. But from our perspective, we are two sectors where we have been incubating organically right now. And if we are able to find any new opportunity for M&A, we will definitely look at it, which is one is around bullion logistics, which we have talked about. And the second is around creating a whole tech and field stack on debt collection solutions. We think there's a very important sector which is emerging in India, and we would like to invest into creating a solution stack there. In addition to this, I think fintech is an area we keep analyzing and examining if there's an adjacency which makes sense for us to be in.
Take that point. Just, when is your analyst meet, the next one?
I think we do every quarter, the analyst meet. The next one.
The analyst day that you, spell out your...
So we did one last year, and I think we did a fairly extensive sort of event at the end of fiscal year this year. I think we would look to do this at the end of FY25.
All right, because the reason why we ask you this is that when you say things there, until you say it there, you don't say it to us here as well, no matter what questions we ask you. So we'll look forward to a detailed discussion at another point in the future. Thank you. Always a pleasure speaking with you.
Thank you.
With that, we are absolutely out of time on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.